And amid a lot of the doom and gloom, there's been a few bright spots this reporting season. One of these is Cardno Limited. The infrastructure services company announced a 53% increase in first half net profit to a record $18 million. And for more on the result, we're joined by Cardno's Managing Director, Andrew Buckley in Queensland from ABM AMRO Morgans in Queensland. Andrew, thank you very much for your time. I guess, first of all, run us through how you managed to increase profits at a time when we're seeing profits, being eaten away by so many other companies.
Yeah, thanks for having me on. Well, look, at Cardno, we've had a growth strategy now for a number of years. We've been growing both through organic growth and through mergers and acquisitions, and that program has continued and allowed us to continue to grow the profits and earnings per share of the company for now 4 years since floating in 2004.
I guess one of the key things you've done as well, increased your dividend to 14 cents per share. What was the theory behind that when, once again, we're starting to see more companies than not decrease or cut their dividend?
Well, I think obviously, the first basis for doing that is the performance, and the fact that we were able to increase our net profit after tax by 53% is what fundamentally allows us to continue to pay the strong dividend. But also, we've maintained a strong balance sheet and a very good operating cash flow, which obviously also supports that dividend. We feel that we have to reward the shareholders for taking the risk of owning our shares, and we couldn't see a reason to turn that dividend down.
Why, though, increase the dividend when, from my understanding, you're also going back to market or looking to raise capital anyway? Shouldn't it be, shouldn't you do one or the other?
Well, I think that as I said, the idea of maintaining the 14-cent dividend is to reward the existing shareholders. However, we want to set our company up ready to take further opportunities that we feel might present, but in acquisitions and organic growth particularly towards the latter part of this calendar year. So we thought the best way was to go back to the shareholders and ask them to participate in the share purchase plan at a discounted price.
A few months ago, the word infrastructure seemed to be a bit of a dirty word for some stocks anyway on the share market, and a lot of that dirtiness, I guess, was because of the debt levels that some companies held. So what does the debt side of your balance sheet look like?
Well, we're carrying a net debt of only $56 million, which makes our balance sheet look very strong in the current circumstances. Obviously, if we want to maintain those sort of net debt levels going forward and still undertake our growth plans, we need to maintain that sort of strong balance sheet, and that's another reason for launching the SPP yesterday. So fundamentally, low net debt is our position.
Okay, you mentioned a couple of moments ago you're growing both organically and through acquisitions. Any more on the cards? Any more acquisitions?
I think that the situation is we've probably slowed down a bit, and been a bit more cautious in recent times. We did make 3 acquisitions during the half that we've just reported on. One of them in the US in a transport infrastructure services firm, which is going very well, by the way. But we would see that there's a bit of a gap now between the sort of private company vendor expectations and what we think is the true value of businesses, and therefore we're waiting for those vendor expectations to change, but we feel that may well happen in the second half of this calendar year.
Being in infrastructure, of course, I'm guessing it's a question you've been asked quite consistently lately anyway, following the government stimulus package, and that's potentially going to flow through to companies like yours. What kind of an impact do you expect?
Well, in fact, it's not just the Australian federal government stimulus package. There's also the US federal government stimulus package that we're exposed to, and we see those stimulus packages as being very positive for our type of business, particularly in relation to our exposure to the public sector infrastructure markets, which range from the significant federal government major projects, but really right down through to local government infrastructure spending, which Cardno is also well exposed to.
Just finally, before you go, what's your general feeling moving forward? Since we've seen I think the mood's been changed from being cautiously optimistic to maybe even more pessimistic, because so many companies are saying that the second half is going to be quite tough. What's your take?
Look, I think that, you've got to take note of what everybody's saying, and it's pretty obvious that market conditions are going to be challenging through the course of this year, and I'd say particularly in the middle of this year. I suppose the emphasis that we would like to put on Cardno is that we've maintained this diversity and developed the diversity of the business, which we believe mitigates our risk and allows us to be better placed to meet those tough conditions and continue to go well.
Andrew Buckley, Cardno Managing Director, appreciate your time here on Business Channel. Thank you.
Thank you.